Hello and welcome back to All Things Money. During this segment, we're going to talk about what's going on in the global economy and markets. Right now, the markets are consolidating around the globe. Europe, emerging markets are still having a hard time gaining traction. The U.S. market has seen a fairly decent pullback of around 7% since April. Nothing to get overly worried about at this point. But going forward, we see a couple of key questions. First is basically, will the anti-austerity movement that brought down President Sarkozy in France and the pro-Europe leaders in Greece continue to gain momentum? And this could force the Germans, Merkel, to add some growth component to this fiscal pact that they have. So that's a big question. And then how far will the new French president go in his campaign promises to raise tax on businesses and high earners, things like that? And in Greece, will the leftist majority emerge from the new election scheduled to be held in June to see if what's going to happen with Greece? They, a little bit different than the U.S., if you haven't been following this, their elections yielded some candidates that failed to form a government. They have more than two parties, and so they have to do when someone wins an election, it doesn't necessarily mean that a government will get formed. I don't want to get too much into politics, but the point is that that really spooked the market when these guys won, and they were basically saying, hey, forget the rest of Europe. We're going to do our own thing. We're not going to have austerity measures, and we don't care if we default on the debt. I mean, I'm kind of paraphrasing. Hey, we'll go back to the drachma, which is the Greek currency. And so people are like, whoa, hey, this is, started panicking. Well, they actually failed to form a government, so there's going to be another set of elections to hopefully they'll get someone, the government that will emerge will not be quite so leftist. Some of the things that we look at the European bank shares. European banks have stabled. There's still problems over there, but they have stabilized. That their relative strength has returned, which is very encouraging to see that maybe the crippling contagion that people were sort of panicking over last month won't come to fruition. So the big question in Europe is what's happening in the south, Greece, Spain, Italy. Is that going to spread, towards the north, Germany and some of the more stable Scandinavian countries? So anyway, that's been the cause of what's been going on here recently. As we go through the summer, these things will work out. They'll either resolve themselves or they won't. If they don't, I think we'll see some more downside potential. And then we have the U.S. Market. Of course, there's going to be a lot of election year factors involved in the market, so it becomes very difficult. Once again, the fundamental trading. We read an article last week, Warren Buffett trailing the S&P 500 the past 3 years. It's been kind of a trend. When I first started investing 25 years ago, we used all fundamental analysis to try to pick individual companies that would do better than the market. And there still may be a place for that, but it is very, very difficult. The psychology and the macro trading that has taken over the financial markets makes it very difficult to be a pure fundamental investor. I mean, we still like to look at valuation and things like that, but to be a pure fundamental stock-picking investor is extremely difficult today. There's a couple of other factors. Of course, the Olympics in London this summer. It's typically a boom for the country hosting the Olympics. It typically adds to growth. We saw that in China the last time. And anyway, just something to think about. So in the U.S., we have some growth that is somewhat moderating, but seems to be stabilizing. The couple of things we're looking at: the Fed is ready and waiting. Chairman Bernanke has made it clear that the Fed will add more stimulus if necessary. What type of effect that will have on the market remains to be seen if they do, in fact, have to execute it. Of course, we have what's called the do-nothing Congress. The election will make it very difficult for Congress to get anything done before November. So there's some pros and cons going on in the U.S. economy. As far as the election year, I love looking at this stuff. We did a little piece in April about sell in May and go away. These I call them calendar anomalies. We typically don't trade on them, but we are aware of them and keep them in the back of our mind. There is the presidential election cycle. And what we see is typically in an election year that the sell in May, go away has a much shorter lived, that the market typically bottoms around the end of May. Now, this is not a prediction. I'm just saying that typically in an election year, the low point of the year has historically been somewhere around May. Now, that's all results. The incumbent wins, the incumbent loses, things like that. Believe it or not, no matter which party it is, the Republican or the Democrat, when the incumbent wins, the markets tend to go up. Now, people say, oh my God, that's awful, and I don't want President Obama to win. But the reality is markets don't like uncertainty. And whenever you have a change, you have a lot of uncertainty. So whether they're Republican or Democrat, historically, since we've been keeping these records back in 1900, when the incumbent party wins, the markets tend to do much better when the incumbent party loses. So that's kind of the election cycle. If you're looking at typically when the incumbent loses, you see the market usually gets a pop before and during the election, but then once the uncertainty sets are in after the election and you have that lame duck session of Congress, you see the markets kind of falter because they really don't know what to expect. But anyway, so but in all cases you see that the mid-year correction seems to end sooner than normal. Once again, I don't know that I would run out and revamp my entire portfolio based on these things, but they're interesting to look at, and sometimes they do have some fundamental basis. But just keep in mind that the markets are trading on emotions, and there's a lot of emotions around the world with all this economic problems that are going on. Well, that's all the time we have for today. I hope you enjoyed the show and that you'll tune in again next week when we'll cover some more interesting financial topics.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media.